Hello fellow traders everywhere, Adam Houston here, co-founder of MarketClub with your weekend trading update for the week ending 7/15. So we're going to be looking at the weekly charts today, but the big stars last week were the precious metals markets that continue to be on fire. Silver up another 7% on top of the previous week's gain of 8%. Gold closed at all-time highs on Friday. Now both the gold and silver reflecting the general fear that's prevalent in the markets right now. For the week, gold put in a solid 3.19% performance. You should be long one trading unit on gold based on our 52-week weekend trading rule. We are expecting this market to open higher on Sunday in the Far East and also on Monday when the market opens here in the States. The S&P was not so fortunate with gains for the past week. It dropped just over 2% for the week. We now have very clear battle lines drawn between the bulls and the bears in this market. The 1276 level on the S&P is where the 200-day moving average comes in this week. In addition to the 200-day moving average, we also have a long-term trend line coming in all the way back from March of 2009. These are two key levels to watch this coming week. And let's take a look at the other markets very quickly. The CRB and dollar index have very little change for the week, and they're pretty much range bound. The crude oil market appears to be trading water at the same time, and the significant overhead resistance at 99.50 basis the August contract. So let's go to the charts. In the first chart we're going to be looking at is the S&P 500, and again this is a weekly chart. We're going back to the beginning of 2011, beginning of the year, and as you can see very clearly, this market really hasn't done a lot of anything when you think about it. We've sort of been stuck. We've talked about this before. We're sort of in this sort of big range here, but what we were looking at originally was this sort of and then down. And here's the battle lines right here. We've talked about this at 1250 on our big battle lines, but you've also got what I said to you before, the 200-day moving average comes in at 1276, and there's a long-term trend line which also comes in right at the same time. And that's coming in at 1276 as well. So a little pixelated here, but those two numbers are very, very important to look at. If we see the market take out last week's low, in this case right around the, let's get this right, the low last week is 1306, that's going to be very suspect. And a lot's going to hinge on this debt talk. You know, even if it's past, it could be still very negative for the markets. Either way, it could be very negative, but I don't see any real strong upside momentum in these markets. And I want to look at one other thing too. Well, let's clear the screen. I want to look at a monthly chart on the S&P 500. And we like to look at the long term, of course. I'm going to go to the max on this one. And we've got our trade triangles, and you can see they did very, very well catching these moves. And we are still in a positive mode. Let me emphasize that the monthly and the weekly are still positive. Only the daily is negative on this. But what I want to share with you is this. If we scope this down, and we can see the only time this market has been really oversold in the last 11 years, or last 8 years, 9 years, is right here. That was the Q1 2009. And you can see the market did very, very well. However, we're right up against the Donchian channel, trading channel on the monthlies. It is overbought, and with the way things are swinging in the country, we could be in a lot of problems. And also, if you look at the last 3 months, now we're still trading the third month, which is right here. This is July. But if you look at June and May, 2 negative months. If we have a third month in a row, that's going to get pretty serious because we haven't seen 3 months in a row, only when we go back to this period here. So let's pay close attention to the S&P 500. I think it could be a big market to be watching. So let's go back to our next market, which is silver. I'm going to put this, I want to put a weekly on because obviously we're not looking at the monthlies on this particular market, but here's the weekly, and let's get back to the year to date. And there you have it. Now I've already drawn in the Fibonacci lines here. Now you also have a very strong trend. We've talked about this. We are at a plus 100, which you can see right here. Daily, weekly, monthly, all very positive. This is the highest close we've seen on a weekly basis in silver in, let's just count, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So 2.5 months, it's the highest close you've seen in silver on a weekly basis. So we've got target zones around 41 and then again around 43. That's what 41 would represent about a 50% retracement of the move from the highs here to the lows right here. And 61.8% would represent almost a $43 an ounce range. So let's see how that plays out. But clearly the market is going to find, I think, good support on any kind of pullback to 38. I think we probably put the lows in, and we're not overbought yet. If we take everything off the screen, let me just do that really quickly, and we'll scope this down to the next level. And you can see we're actually coming on the weekly charts. We're actually coming from an oversold condition and just moved out. So we have some room, quite a bit of room on the upside for this market to move higher. So let's go to our next market. All of these Fibonacci studies I've drawn on here, you can do it yourself very easily with the weekly charts. You have exactly the same information I have. And we're going to go to our next market, which is right here. And that is the gold market. And clearly we've talked about gold, gosh, on our 1 p.m. updates, our weekly shows, everything all the time, saying this, we felt this was an energy field right here. And that's exactly what it has turned out to be. We've broken up to the upside. I think we have a target zone in gold right now of 1650 to 1670. Now people could say it's going to go to $2,000. Yes, they could be right, but the reality is we're traders. We're not going to be in this market if it has a $100 drop, which it has done quite often in the past. So again, we're looking for gold to continue to go higher. We expect gold to be higher when we open for trading on Monday morning here in the States. Of course, Europe will be ahead of us, as well as Asia on Sunday. So you can check with MarketClub. We have 24/7 or 24/6 real-time prices for precious metals. Gold is one of them, silver, copper, and so forth. All those are available to you as a MarketClub member. But this market looks to us like it wants to go higher. We've broken out of the energy field to the upside, and we're coming from quite an oversold condition. So let's clear everything off the screen and go to our next market. And the next market is the crude oil market. And as you can see here, I'll scope this down because I want to share this with you. Crude oil has sort of just been going sideways, really no strong trend to speak of. This is the resistance level right here on the August, and that's 99.50. And we need to go over that level to really get some upside momentum going in this market. I think for the most part, we've seen this is the bullish engulfing line. We talked about this 3 weeks ago. It was confirmed the previous week, and still we've had 3 positive weeks in a row with crude oil prices rising, which is something to be a little bit concerned about given the state of affairs. So I think for the most part, though, we need to do a little more work before we get any kind of really upside momentum going in this market. But this is the level, 99.50. You see the market trade over $100 a barrel again. That's saying that the market's going higher, in my opinion. So let's clear the screen, go to our next market. And easy to do with MarketClub, just click here. And this is the dollar index. And again, you see it's very clear. This market closed, actually the dollar closed slightly lower for the week. I think the difference, I think the dollar closed down 0.6% for the week, which is really zero in my mind. I mean, no change at all. But you're still trapped in this kind of trading range we talked about. Just draw this across here on the downside. So it needs to move out of this and the impasse may be the budget talks breaking down, being agreed upon. I'm not sure what it is, but certainly if we see the market go below 74, that'll be the lowest we've seen it in quite some time. You may get some momentum on the downside, but it's a question of what's worse, the euro or the dollar, and they're both pretty bad right now. Our score on this market, let me just take everything off the screen again, is a plus 75, and you're really just seeing this really not a lot of enthusiasm either way. So there's the mix, if you want to call it the mix. Daily's down, weekly's up, and the monthly's up right now. And we only just turned up, and this is a fluke. I think it was just a knee-jerk reaction there. So let's go to our next market. And this is an important market. This is the one that Ben Bernanke does not want you to see. And basically, this is the CRB index. I call it the CRB index, but it's really the official name is Reuters Jeffries CRB index. For years and years, it was known as the CRB index. That's the Commodity Research Bureau's index of markets that make up food groups and energy and so forth. Very important index, but as you can see, for the past 3 weeks, we have been actually trending up. Right here, you can see how we've just been moving higher, and if you also take the close, this close is the highest close we've seen in this index in over 10 weeks. So it could be significant. I really want to watch this market very carefully, and I think we could see we've got a mix. Let's see here, obviously the daily and the weekly are positive. Only the monthly is still negative here. So I think we want to give this market very close attention and see what happens. I think that inflation is going to come back into the country again. So it seems to be every sort of 30 years, 20 years, we get some serious inflation coming in. I think we're getting ready for that to happen now. So let's look at something else I have for you, which I want to share with you just today. So let me just clear this off the screen and bring that up. You know, we do the weekday show, but I do a 1 o'clock update every day. But we do a week show every Wednesday at 5 p.m. And I really want you to have the opportunity to participate in that show. So here's the show. It's be part of Market Club this week. Basically, you can call us at 410-867-2100, extension 129. You can ask a question about the market. You can leave a message about the market, or you can tell us your success stories using Market Club and how we teach our course and how we trade. We'll try our best to get you on the air this coming Wednesday at 5 p.m. when we shoot and tape the show live. So definitely get your messages in. We'd love to hear from you. And once again, thank you very much for taking your time to listen to this broadcast today. And as always, we rely on our market-proven trade triangle technology to catch the big moves. So let's see what happens in the metal markets this coming week. Should be very exciting. Let's watch those equity markets because we know where the line is drawn in the sand, and let's make some money. Adam Hewison for Market Club. Every success.